Today I will be calling cable. My name is Wakar Meyer and I'm your Elliott Wave analyst, reviewing what has been and is likely going to come in cable price action. I thought a nice way of starting this pilot episode is to do a long-term analysis of what cable has done. So here's a chart I was able to dig up. And you can see from the early 1900s, cable has done nothing but drop for about 80 years. Now in Elliott wave terms, what I believe it's done is 5 waves down. And this 5 waves down you could label A. You've got 1, 2, 2 being expanded flat, 3, 4, 4 being a zigzag, and then 5 waves down, expanding diagonal, 5th wave being the longest wave. And with that perspective in mind, I think we can go to something a little easier to look at. So here on my TradeStation chart, right here is the end of that 5 waves down that was about 80 years. Okay, so that 5 waves down, I'm going to label that A. Now I believe everything it's done since then is making a B wave of the same degree. So from 85 to 2007 we had a 535. That is A wave of what's going to turn out to be a larger B wave, okay, of the same degree as here. And within that internal B wave we would expect alternation. So if 535 is what A is, then I'm looking for B to be 335, and I think that's what's developing. As you can see here, I've labeled this as 3 waves. When A is 3 waves, you can expect B to be a flat or a triangle, and since 2009, I think that's exactly what's been happening. A triangle has been developing. A wave, B wave, C wave being the complex wave, D wave taking the longest in time, but still simple, and now it's moving up to complete E wave. Okay, so now if we zoom in on a shorter time frame, being the daily, you can see that's exactly what's happening here. I don't have the channel drawn, but you can see probably visually that this movement up has broken the channel. That's usually a good signal that a wave has ended. And going to an even smaller time frame, okay, what we have here is 5 waves down to complete the C of D leg of the triangle. And this triangle has been going on for quite some years now, since January, I think, of 2009. But getting back to our current wave, it looks like, to me, wave 2 was an expanded flat, wave 4 was a zigzag, and wave 5 being the extended wave. Okay, now if you know anything about Elliott wave, you know that when the 5th wave is the extended wave, the commiserate retrace will usually come back to the internal second of that 5th. These dotted lines show that zone. Since then, you can see that price action has been maintaining a channel and seeking that zone. So I believe we're currently in an E wave, and that E wave would break down as A, B, and C. A, of course, being 5 waves. We have a complex correction here that would be W, X, and Y to make B. And I believe our C wave is going to be 5 waves that will turn out to be a ending contracting diagonal. So first wave would be the longest wave, 3 shorter, 5 even shorter still. And as you can see probably visually, we'll be able to achieve that retrace zone and still maintain channel integrity. As you can see there, I don't know if this 3 is over yet. It may be, may not be. I would not expect it to exceed the channel, and I would not expect it to exceed 100% of the length of 1. But as you can see, it is likely it's going to be able to come back into the price territory of 1, okay, and then push up to achieve that zone while still maintaining channel integrity and being shorter yet still. So right now, that's what I think is going to be happening in the pound short term. This may still take several days, maybe even a couple of weeks to play out. But when that happens, I believe there's going to be a tremendous opportunity to go short in the pound. Now, in Elliott wave terms, you would probably want to wait for a break of this channel to the short side. Maybe you'd be able to count 5 waves down. Maybe you wouldn't. You would look for something like this. You'd want it to break the channel. If you could count 5 waves down and you were sure they were of the same degree, of course you can never be sure of anything, but if you felt like they were of the same degree, you would expect a retrace. Most likely that retrace would come up and touch the lower end of the channel, and that would be a great spot to take a trade. And when I feel like there is a great trade setup, I will tweet it. And I'll always include the hashtag calling cable. So this is the first episode. I think right now is a wait. We should all be in wait mode with regards to trading cable, but there's a tremendous opportunity coming up. And I think if we want to go back out to a long-term view, I believe that drop that's coming is going to be colossal. Okay, so if this entire piece right here is an A wave, then the B wave would have to drop 90% of the rise. So we get our handy dandy Fibonacci tool, and as you can see, when it busts out of the triangle, you would expect it to come down, and I haven't done it exactly here, but it's close. You would expect it to come down to 116. So a drop from, somewhere around 156 to 116 is a heck of a move in currency, right? If you were to lever up enough with a tight out, you could literally double your holdings, but I don't trade that recklessly. And when time comes, I will be giving trade advice. I always like to make sure that my trades have a 2-to-1 win-loss ratio. So thank you for tuning in to this pilot episode of Calling Cable, and I will be doing these daily with weekly recaps of the dollar. And I will be tweeting as warranted with trade setup information. I'll be giving you where you should be getting in, where you should be putting your stop loss, and where a likely take profit is laying. So that's it. I hope you've enjoyed it. Share it with your friends if you have. Remember, hashtag calling cable for all of those on you on Twitter. And good trading.